Good morning. I'm delighted to have the opportunity to be here and make some remarks today. Last month I had the pleasure of attending the dinner the Chief Executive talked about that he hosted to mark the occasion of the visit of Vice Premier Li Keqiang to Hong Kong. And in that speech, the Vice Premier spoke enthusiastically of the growing importance of China, of Asia Pacific more broadly, in the changing global economic environment, and his belief that this will, using his words, this will create an ever bigger platform for Hong Kong's future development. He was absolutely right. We share that view. And I want to borrow that image to describe the unique platform that Hong Kong represents. Everybody here knows, I hope, about HSBC's deep roots in Hong Kong. We were set up there in 1865 to finance trade between Hong Kong and Shanghai and the likes of the UK, France, the US, and Japan. Today we have a unique perspective of what is happening in Hong Kong. Some 90+% of the total banking population, most of the businesses, and more importantly, more than one in three of new locally incorporated companies have some kind of relationship with HSBC. But I'm not going to rehearse these familiar points. I just want to use this viewpoint, this perspective, to share our experience and the current trends in Hong Kong and focus on two pillars that will support Hong Kong's future development. The first pillar is that Hong Kong is key to China's going out and leading in policy, a bridge into and out of China. Anyone who spends any time in Hong Kong will know that it is an incredibly dynamic place. To set up a business in Hong Kong is simple and quick. Takes less than half the time, for example, it takes in the UK. But more importantly, reflecting the dynamism, businesses in Hong Kong are very outward-looking and very confident, very positive. 84% currently say they're planning to expand their international business, which is 10% higher than the international average, and if you contrast it with business sentiment in today's developed world. And indeed, that is why, in fact, we took the decision a couple of years ago to have the principal office of our own chief executive in Hong Kong. Why? Because of the energy of the place, because of the cluster of businesses focused on the opportunity, the positive opportunity, their enthusiasm, the growth that's represented by Hong Kong itself and the region, in contrast to so many other parts of the world today. And Hong Kong is perfectly suited to the task of helping China's companies access global markets, expand overseas, as well as supporting companies who choose Hong Kong as their base for the region. And in our business, we're seeing this happening in real time. Last year, in our commercial banking business, we worked to grow referrals out of Hong Kong into mainland China by over 25%, and indeed referrals from business in the mainland to Hong Kong increased by over 70%. Our team that supports Chinese corporates in Hong Kong has seen significant increase in inflows, and we're also seeing China head offices growing apace what they do in Hong Kong, demonstrating and evidencing Hong Kong's strong position as a financing source for those businesses. So what is driving business to Hong Kong? What is making Hong Kong successful? The answer is simple. It's the international connectivity that Hong Kong represents. When business comes to Hong Kong, companies normally are seeking not simply to develop their business domestically in Hong Kong, but using it as a springboard into other markets in both the region and indeed now globally. And we have, from our perspective, an excellent viewpoint of all of these flows and trends as we make available our global network to support their ambition. And as trade patterns evolve, we expect to see continuing huge growth in trade between the emerging markets, which will intensify the spotlight on and the opportunities for Hong Kong. If China, India, Brazil, Mexico, the Middle East, as up-and-coming economic superpowers, are to fill even a part of their long-term ambitions and potential, they need to be able to increase their trading opportunities beyond the industrialized world and gain access to both the resources and the markets they need. This will represent a fundamental change in their growth patterns, and it means that we're likely to see, indeed we are already seeing, the development of what we might call a Southern Silk Road, a network of trading routes and economic partnerships that connect emerging markets in Asia, the Middle East, Africa, and Latin America to each other. Our own research suggests that trade and capital flows between these emerging economies could increase tenfold in the next 40 years, and Hong Kong has a real opportunity to be the hub. Indeed, we're building our own strategy around connectivity, focusing on emerging market to emerging market flows and emerging market to developed markets, trade and investment flows. And we're building our business strategy in this way simply because it reflects what our clients tell us are their priorities and what is our greatest relevance to helping them. And as these flows shift and economies expand, the patterns of consumption are also changing. China's middle class is swelling rapidly and already constitutes the largest market for luxury goods, second largest market for luxury goods in the world. So these emerging patterns of trade and consumption are hugely significant for Hong Kong as it acts as the world's bridge into China and the region. We're seeing more and more companies target Hong Kong as they seek access to the wider Asian markets and to China mainland. Last year, the number of UK, French, and German companies, for example, that we helped to do business in Hong Kong increased by over 60%, and the number of Brazilian companies increased even more, albeit from a low base. And this connection is growing quickly, and we're supporting this. In March last year, we set up a Latin America desk in Hong Kong to provide Asian clients easy access to Latin American products and Latin American companies access to China and Asian markets. And the flows both of investment products, foreign exchange, and referral of business has been remarkable since then. This brings me to my second pillar, which is Hong Kong's growing strength as a global financial centre. We're very excited by this. As more companies and investors look towards the region, significant opportunities are emerging. As the Chief Executive mentioned, while the latest Global Financial Centres Index, published in March, continued to rank London and New York in the top 2 position, it showed Hong Kong at number 3, narrowing the gap. Hong Kong is today the number 1 global IPO centre, and most of these companies were mainland Chinese companies listing in Hong Kong. The diversity of IPO listing in Hong Kong is increasing. We've acted for numerous multinationals using Hong Kong as a place to raise capital, not just to seek access to China and the wider region as they seek to be present in these faster-growing markets, because they also want to tap in to one of the growing strengths of Hong Kong, its shareholder base. We're also seeing the diversification in type of IPO change, in the sense that we've now seen the first ever offshore RMB IPO. Much will be said later on today about this, but China's offshore RMB market cannot be ignored. Indeed, it's an enormous opportunity, given the size and importance of China's trade with other economies and the country's rising global economic influence. And it's potentially hugely significant and will reinforce Hong Kong's position as a global leading financial centre. RMB internationalization is moving faster than many previously expected, with RMB deposits booming, quadrupling between 2009 and 10, and the offshore RMB market now with a daily turnover of just under 2 billion. Trade settlements in RMB is also fast gaining pace and widening in reach, and we estimate that as early as 2015, around a third of China's daily foreign trade, equivalent to $2 trillion annually, will be settled in RMB. This would make it a top 3 global trade currency. And as London has demonstrated, being a global hub for trade and foreign exchange is the mark of a successful financial centre. And I believe that Hong Kong's in the foothills of expanding rapidly in its role. So in Hong Kong, we've seen rapid growth in offshore RMB deposits, companies moving quickly to issue RMB bonds as a stepping stone, trying to capture growth opportunities and match their funding needs, not just for the fact that borrowing costs through Hong Kong are more favorable than they are onshore, but because they want to seek to expand that marketplace as a source of international capital. Whether it's Tesco issuing RMB, a dim sum bond, in order to support its expansion in China, or Volkswagen supporting its expansion of manufacturing and marketing of its vehicles in China, the market grows enormously. And although it appears that many corporates are seeing these trends, there are many, we believe, who still do not comprehend the significance of the opportunities that this market brings to global financial capital raising. It was great to see when Vice Premier Lee, using his visit in Hong Kong last month to give a strong vote of confidence to the growth outlook for this particular part of the market. With central government's commitment to its development, London, which currently dominates the world foreign exchange market with 37% of global foreign exchange flows, must look over its shoulder and see very rapidly the importance and the relevance of Hong Kong increasing. We see this only as a good thing. It's also becoming increasingly apparent that businesses can learn a lot from looking at Hong Kong. We've always believed in the potential of Hong Kong. You're about to hear from one of the great success stories in Hong Kong, and one of the fantastic privileges that we have in HSBC, having been around for close to 150 years, is seeing how many businesses in Hong Kong have grown from very small beginnings some considerable period of time ago to be global leaders today and enormously successful. But it is equally exciting to see businesses that have come to Hong Kong in very recent times be remarkably successful, taking the opportunities that Hong Kong has to offer to build their businesses, to make great strides in the region and indeed internationally, and build a successful platform for future growth that I think is very difficult to achieve outside of emerging markets today, and Hong Kong represents a platform with global connectivity because of its positioning in the world. So today I think the opportunities are greater even than they have been in the past. Hong Kong is in an enviable position, highly developed, highly sophisticated, with all the growth potential of emerging market and with all the infrastructure and social features of a developed market. It's on that unique platform which we're basing our future growth, supported by the two sound and unshakable pillars that I've described, and I encourage you to do likewise. Thank you.
Chairman Jack So, Sir David Brewer, distinguished guests, ladies and gentlemen, it is really a great pleasure to be back in London and to be able to speak to such a distinguished audience. David, you're absolutely right. It's a great pleasure to be back again, and very much reminiscent of my former role as chairman of the Trade Development Council, and I made many trips to London, to the UK during the decade of the 90s, and it was a very interesting time, and it's a great pleasure to be back here again. I've been asked to talk about Hong Kong as a gateway to China, which obviously is something that's very much on the minds of the audience and many businesses around the world. And I'm sure that many companies in the UK wish to build their ties with the mainland because business between the UK and China is absolutely thriving. Total trade was up 28% to more than $50 billion in 2010. In the first 7 months of this year, it rose another 17% year on year. And as strong as these numbers are, I feel that Hong Kong can very much help boost them further. And let me talk about a few aspects that UK companies may look to in tapping the mainland market through Hong Kong. First of all, let me just put in perspective the relationship between Hong Kong and the mainland. Ever since the reunification in 1997, we have really been building very strong ties and increasing ties with the mainland. And I would like to say that the biggest integration, if you would, that has taken place, obviously all under the auspices of one country, two systems. What I'm really talking about is the economic integration and increasing flows of people, of goods, of funds, and of information. Really, the strongest part, in my mind, is the Pearl River Delta, which is the part of in the southern part of China, and it's the part between Hong Kong and Guangdong province that is really key. This has very much, as the chief executive said earlier, made itself into one of the most competitive economic regions in the whole area. And it will increasingly play an important role in connecting China with Southeast Asia and the ASEAN countries. In terms of our trading relationships with the mainland, we rank actually number 3, just after the US and Japan. And we account for nearly 8% of mainland's total trade in 2010. Increasingly, the relationship is two-way, and today, mainland is one of the leading investors in Hong Kong. At the end of 2009, the mainland's cumulative direct investments in Hong Kong was just under $340 billion US dollars, or 36% of Hong Kong's total stock of inward direct investment. Hong Kong is also a key offshore capital raising center for Chinese enterprises, as Douglas said earlier. As of December 2010, almost 600 mainland companies were listed in Hong Kong, and I'm sure you hear a lot more about this in the afternoon. These include H-shares, red chips, private companies, with a total market capitalization of almost 12 trillion US dollars, 57% indeed of the total Hong Kong market. What I'd like to do, however, is to put in perspective Hong Kong's role and in the whole development of the mainland in the upcoming 12th five-year plan. As you all know, the 12th five-year plan has been announced, and it will start in 2012 next year. And the plan really, in my mind, has a lot of very important dimensions, and I strongly encourage all of you to look at it. But one dimension that really needs emphasizing is this concept of rebalancing. The plan really calls for a major shift in the Chinese economy away from an export-led growth model to a much more domestic consumption-driven model. And that shift, in my mind, is the key opportunity that is facing us in Hong Kong, and through Hong Kong, opportunity for the whole world is also immense. The whole idea then is to develop consumption in the local mainland market and to use consumption as a driver instead of an export-led growth which is dependent on what the economists will call factor prices, cheap land, cheap labor, a lot of investments, and so on. And the primary way of actually driving the domestic consumption is, first of all, by putting money in the hands of the consumers. And that's also in line with the need for a more social rebalancing in terms of a more equitable distribution of income. So the plan actually calls for a massive increase in minimum wages over the next 5 years. In fact, it calls for over 13% per annum increase over a 5-year period. And that really puts a lot of money in the hands of the consumers in order to do the consumption. However, in order to actually take advantage of this increasing consuming power, it's very important to be able to build the distribution networks and the systems to be able to actually get the goods distributed efficiently inside the Chinese market. And that's where Hong Kong is playing a major role. Hong Kong, with its experience that it's gathered in terms of working with external markets, have now taken that experience, and if you would flip the supply chains from just being outbound now to inbound and distributing the products inside China, and actually serving as not only a financing center, but also a logistics center for the whole region. And I think there is a huge opportunity I think there's a huge opportunity for companies that want to tap the Chinese market to actually use Hong Kong as that platform, to access first through the Pearl River Delta, the southern region, and then the entire country from Hong Kong. In many ways, Hong Kong is also serving as the showroom of international products for the Chinese market. Now, this is really exemplified by the fact that 23 million tourists come from the mainland every year, and that's up. These numbers I'm quoting you is from 2010, and that's up 26% from 2009. And this year, the tourist arrivals continue. For those of you who are not familiar, the mainland tourists have overtaken our other tourists from America, from Japan, as the highest spending tourists in Hong Kong. And the mainland tourists spend a lot, and they also, the expenditure, however, is in shopping. Not so much in consuming food and hotel lodgings and so on. And that spells a lot of opportunity for us. The mainlanders, in fact, spent $11.6 billion in Hong Kong in the year 2010. And surveys show that Hong Kong is a key market for mainlanders to learn about international brands and products. Hong Kong is like a global shop window. So if you walk to the central of Hong Kong, you'll see all the major brands there and increasingly taking bigger and bigger shopping spaces. Because what they see there is the opportunity not just to sell to tourists as they come to Hong Kong, but to actually showcase their products so that brands are actually popularized inside the Chinese market. Many of the leading brands tell me that if you want to really establish your brand in China with the Chinese consumer, you cannot do without a shop window presence in Hong Kong. And it's that important. In order to, just to give you an idea about the size of the market, although personal consumption is still modest today in China, it's only 1/6 of the United States, but it's expanding very rapidly, and by 2030, it's forecasted to be the second largest in the world, only after the United States. And all this, of course, is driven by not only the idea of putting more money in the hands of the consumer that I mentioned earlier, but by a very strong policy of urbanization that's going on in China. The current 5-year plan calls for 1% urbanization of the population every year. And the 12th 5-year plan that's going to be initiated next year continues that urbanization policy. 1% may not sound very much, but it's 13 million people. And so as people move into the cities, that means more housing, and that means more development of modern retailing. That means more consumption of consumer durables, and then it goes on. So as a result, Hong Kong is becoming really a focal point for major brands to actually establish themselves through Hong Kong onto the mainland. I might add that not only is Hong Kong important from a logistics and brand development standpoint, but Hong Kong is also a very good place where you can raise funding for your activities on the mainland. Our stock market has been mentioned, and I just touched on it. But it's also, I like to say, it's increasingly attractive to global companies seeking to enter the Chinese markets. We have a lot of recent examples, like Prada has recently listed in Hong Kong. L'Occitane, which is a very famous skincare brand, is also IPO'd in Hong Kong recently. So in conclusion, ladies and gentlemen, this massive presence of Chinese companies investing in Hong Kong, dealing with Hong Kong, and now acting as tourists in Hong Kong, really provides Hong Kong with a tremendous base to tackle the mainland market. UK traders are beginning to appreciate this. Last year, some 160 UK exhibitors, up 6% from the previous year, took part in the very well-organized trade fairs by the Hong Kong Trade Development Council. And the UK buyers continue to turn to Hong Kong for their Asian sourcing. Not to forget, the sourcing side continues, and the products are actually being upgraded. And the trade fairs are really doing tremendous business. And last year, over 6,000 UK companies participated, up about 15% from previous years. So in conclusion, ladies and gentlemen, given the very close historic ties that the UK has with Hong Kong, I see no reason that UK products and brands should not be at the forefront of tapping the Chinese market. And I hope that it will all be done through Hong Kong. Thank you very much.
I'm going to start because they both referred to the activities recently of Vice Premier Li Keqiang. Douglas mentioned he had attended the dinner when he went there, and Victor was talking about what he's been saying about Hong Kong and about the relationship. Earlier this year, in January, Vice Premier visited the United Kingdom. He started off in Scotland, in Edinburgh, making arrangements for what he referred to as a VIP visit later this year, which in that context means very important pandas. And the Edinburgh Zoo really, I think, has done something fantastic to get this happening. Hopefully, they're referred to, hopefully, as a pair of breeding pandas. But it does say something, I think, between the relationship between the United Kingdom and China, when you look at the previous occasions when such gifts have taken place. But in that time, in January, we had a CBBC dinner for him in the Royal Courts of Justice, and he used that opportunity to talk to us about the 12th five-year plan. He'd given a significant speech the month before in December in Nanjing, and he took us through his thoughts, the points that he particularly supported in the new plan, and we were all very interested in the concentration on the service sector, which I think he said had perhaps suffered from lack of support, not as much support as manufacturing in the previous years. If you look at the coastal cities and the transport and the energy, such like there, yes, a lot of attention was quite rightly given to the manufacturing sector. And therefore, for those of us involved with the service sector, I think it's very helpful to know that the leaders are wanting to help this move forwards even more, because it's done pretty well by itself, but to help move forwards even more strongly in the future. So perhaps if I could ask Douglas and Victor, first of all, to tell us what they feel about the opportunities that are growing for the financial and other professional services sectors.
Well, I think they're huge, and I think the Vice Premier was very reassuring and indeed very encouraging in terms of the rebalancing that Victor talked about, and also the significant opportunity that Hong Kong had, given the service sector in Hong Kong all the way through logistics, education, financial services, legal, financial, etc., is so well established. And I think that one of the observations that I would make about, looking at success around the world is all about clusters. I mean, there are clusters of technologists in the west coast of America. There are clusters of financial services experts in London. Hong Kong has an amazing cluster of logistic expertise, financial expertise. It has a legal system that works. It has a social system that works. It has culture and so on that many other places in the world don't have. And it has all these things on the backdrop of China, and China increasingly not only being an essential market for future growth in its own right, but being a pivotal part of trade flows in the region, and increasingly between the region and the other faster parts of the world. So, the cluster effect of people going to Hong Kong because it works reinforces it working, and I think attracts others.
Yeah. Well, I think, David, you're absolutely right to focus on services, because just to give the audience a macro perspective, China's economy actually is actually less developed in services, even compared to other developing economies. In fact, the current numbers are 43% of the GDP of the Chinese economy is coming from services. And the 12th five-year plan calls for that to be moved to actually 47%. So there'll be basically a 4% move percentage points in the GDP. But that's for a large economy like China, that's tremendous. Now, when you contrast that with Hong Kong's situation, 93% of Hong Kong's GDP actually comes from services. So Hong Kong is a highly intensive service economy. All the things that Douglas has just mentioned, financial services, logistics, and all professional services, actually provides a very great opportunity for us to work with the mainland, to actually help the mainland develop its services sector very quickly. And I would suggest to UK companies that Hong Kong will be a very great platform for you to actually use as a base to set up so that you can actually sell your services into the mainland from Hong Kong. So for those of you in the service sector.
Well, I'm interested about that springboard side, particularly when we come on to SMEs in a moment. In the China-Britain Business Council, during this year, we've commissioned a report on other major cities in China other than Hong Kong, Guangzhou, Shanghai, and Beijing. And we've identified 35 where their particular ambitions and specializations, again, particularly in SMEs, link into what the UK is leading on: creative industries, meditech, biotech, and financial services. You represent two market leaders, so you're up in the very big companies setting the way. But how do you see your being able to help the SMEs as companies coming in via Hong Kong, possibly, as a springboard? Because we do certainly recommend, with the help of our Consul General in Hong Kong, to go and find somebody who can hold their hands and take them over the border, whether it's with SEPA or further after that. How do you see the big companies being able to help the SMEs, which are the largest number of companies in both our countries? How can we go forwards together?
Well, it's the lifeblood of what we do. I mean, Hong Kong is remarkably blessed with serial entrepreneurs who start small, get bigger, and then start again small and get bigger again. And indeed, our largest segment in Hong Kong is helping the small, mid-sized companies that set up family businesses and grow, and indeed setting up desks all over the world and helping people access into Hong Kong or in Hong Kong, helping people to come into the environment. So I mean that is our lifeblood, and our business is focused on that sector probably as much as any others, because as companies get bigger, they can do more for themselves. They still happily need us from time to time, but we want to build the next business that looks like Victor's at some point, or at least contribute to it.
Well, David, I don't think the SMEs can find more like-minded fellows in any market than Hong Kong, because Hong Kong, in my mind, is a market of SMEs. And I think to be able to partner with other SMEs in Hong Kong, I think would be something that people will find to be very, very convenient. We ourselves have set up distribution channels that would actually more than welcome SMEs actually to use to distribute their products inside China. But just a word about the other cities that you mentioned. One of the things I like to emphasize is that don't think of China now as just the major cities of Shanghai, Beijing, Guangzhou, etc. The action is really moved to the second and maybe even third and fourth tier cities. And we're finding where the growth really is now in the lower tier. And the lower tier cities actually are still huge by any standard. And the markets there are plentiful. So these are all virgin territories ready for not just big companies, but for small and big companies alike. So I think there's a lot of opportunity. I would say go further and deeper afield, and you'll find a lot of opportunities.
That links into the first of the written questions I've got here from Anu Agarwal, saying it is hard to get bank loans in the UK. What financial support can UK businesses, startups, get from the HKTDC? And what support is provided by HKTDC to do business and set up a company in Hong Kong by a UK startup company?
HKTDC? Seems that was directed at you.
They don't do loans, do they?
No. Yeah.
I think TDC refers them to HSBC.
Yeah. I mean, our lending in Hong Kong grew 40% last year. So I don't think there's and indeed the Hong Kong banking system is one of the best capitalized, one of the most profitable, and one of the most liquid banking systems in the world. It's a very successful system. It's very successful companies. And it is very used to putting risk capital to work. So, I think that I'm going to get myself into trouble now. You may be talking to the wrong people, but we're delighted to try and help people enter Hong Kong and grow in Hong Kong. There's a rich tradition of small companies setting up in Hong Kong from very, very small roots, setting up facilities and building. And the great thing about Hong Kong is the opportunity to grow quickly and to work with like-minded businesses is very powerful.
I'm getting on to one now particularly addressed to Victor. And it says, what's really focusing more specifically on the question we've just had. This is from Lizia Volkman. What support package can luxury fashion brands receive in order to set up flagship boutiques in Hong Kong? How can the smaller luxury fashion, accessory, tailoring brands establish themselves in Hong Kong, China? What help can they get support to enter the Hong Kong market as a brand? It's something you touched on the retail side, Victor.
Yeah. Well, well, first of all, I think the luxury brands are having a great time in China. The luxury market is booming ahead. I think our latest numbers show that it's growing at about 18% per annum. And we ourselves are participating in the luxury market, and we see it. Com store sales are going up. I would say that for the real top end of the luxury brands, the key cities will probably be the place to get established first. Although it's expensive to operate in Shanghai, I think you need a Shanghai presence. And then from there, I think you could spread out. A lot of people establish flagships in the big cities and then look for franchisees around the country. That's one model. If you're really ambitious, perhaps for bigger companies, then you may want to actually establish your own stores in other cities. In Hong Kong, there are also some very good entrepreneurs that would actually take luxury brands and actually take them into China, maybe in stores with multi-brand formats. So that could be another opportunity. But I think the TDC has also done a lot of studies on the luxury market, and you can take a look at those, and that will give you actually a lot more in depth. In my mind, one of the biggest opportunities in China right now is, in fact, the luxury market.
Right now, the next question is from MJS Lens Technology. This is a company which manufactures contact lenses, and we're all wearing spectacles, so maybe we're potential customers for MJS Technology. They say they have designed and built a range of bespoke, robotized range of equipment for the manufacture of contact lenses in high volume to low cost. They provide a turnkey operation. Full training is given, so the skills can be acquired. Since the company was registered in the UK in 2008, they've sold £10 million worth of equipment, £7 million in China. The question is, how is my company able to find suitably advanced contact lens manufacturers in China or investors?
Well, the first point I would make is with the rising wages in China, there's always a need for companies that will provide automation. The mix between the use of labor and the use of capital and automation, I think, is changing. So I think the first point I would make is for anybody like what you have just described, David, I think that there's growing opportunities. These opportunities are likely to be developed in the more sophisticated production areas, and that I would say would be the Pearl River Delta next to Hong Kong in the south, and the Yangtze River Delta next to Shanghai in the eastern part of China. And I think looking in those areas, there are a number of people that distribute high-end machinery, and I would go for those.
And I'd say, I mean, one of the roles we perform, I think, well, and this isn't just HSBC, but one of the roles that banks perform well is introducing their customers to other customers. So I think use the banking contacts that you have to say you must have other people who would be interested to us, if you get to know us well then and confident, introduce us to others you think would benefit from a conversation. I think one of the things we find universally true is that businesses in Hong Kong, businesses in China are always keen to expand the network of like-minded businesses all over the world because there may well be opportunity. That's the way I would do it.
That's two opportunities made there to be followed up by the lens technology. Next, a completely broad question. Panel, please compare Hong Kong to Singapore, pros and cons in context of today's symposium. William Nielsen. How long have we got? Please compare Singapore and Hong Kong. What comments?
You know, I'll answer the question in a different way, in a sense, which is, you know, one of the things that's really important is to be around other successful places. I think it's good that London, New York, Paris, now Hong Kong, Singapore, Mumbai, Sao Paulo, all are having success and growing. To be part of a network where everybody's doing well and hopefully you do a little bit better should be everybody's aspiration. You know, I think one wants to be around other successful centres because that generates a greater volume of international trade and business flow. It's not good, and I'm in an industry where it's very, very obviously not good to be successful around other people that are less successful. You want everyone to succeed. You just want to do a bit better. So, you know, in the context of this conference, Hong Kong is clearly the focus, and we certainly hope Hong Kong leads. But we certainly wouldn't see Singapore down at all. We just want them both to succeed. We want Hong Kong to succeed even more.
Well, maybe maybe I'll give a less politic answer. Well, I think obviously both Hong Kong and Singapore are very successful and important cities, but I see them as really being centers of different regions. Singapore, in my mind, is the access to ASEAN. And we certainly have established in Singapore our Southeast Asian headquarters. But Hong Kong is very much the access point to the China market, and it's different. So to the extent that you're interested in China, and China being the center of consumption and growth in Asia, I would highly recommend Hong Kong.
And to give you a follow-up on that, Mr. P. Worrell says, sourcing from China is getting more expensive. Labor increases, power increases, etc. Where do we go in future? Is it still China? What part of China? What about other ASEAN countries?
Sorry, David, I missed the first
part. Don't worry. The sourcing from China is getting more expensive with labor increases and power increases. Do we still keep in China? What parts of China is the future China?
It's the production.
Yes, manufacturing.
Yes, costs are going up, especially the costs along the coastal parts of China. So really, there is some production being moved outside of China to Southeast Asia. In particular, the target areas are Vietnam, Cambodia, Indonesia, and some have gone really as far as Bangladesh. Those are the alternatives. But many people say the alternative to China production is China itself. Now, what does that mean? That means the coastal areas may be very expensive, but the interior is probably where you could actually get a lot more cost-effective manufacturing done also. So there's a lot of migration from the coast into the interior regions. And I think there will be a lot of companies that have not yet really found their products being exported that are now being brought into the global markets. The disadvantage there, of course, is that you have to then handle the logistics to get the products from the interior of China to the coast to actually get them shipped to the overseas markets. But I think the migration to the interior of China is, in fact, proceeding. Final point I would make is let's not ignore the fact that even in the coastal areas, a lot of companies have chosen to stay there and upgrade. And you're going to see a lot of
companies also remaining competitive because of the upgrading.